Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. We've got a great show coming up for you. Wait for it. Coming up, we're talking to Sarah and Lee, learning how we can make money partnering with experts.
The good thing that we control is because we are, we're finding the deals, we're constructing the deals, we're doing like everything from A to Z, is that, when the market is coming down, we can offset some of those costs through construction, through management, through a bunch of other things.
Hey, it's Sarah Larbi here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Are you looking to buy an investment property and you're not sure where to source the down payment from? You may be sitting on it. Many investors find this first source of their down payment for their first investment property from the equity in their current home. The number one objection I hear is, well, then my monthly payment is going to go up. A couple things. What if you restructured that debt to make sure that you weren't paying out of pocket for that additional cost? Or what if you were buying a quality cash flow property that produced enough rental income to pay for that additional borrowing costs? Now, this may not be for everybody, but this is an exceptional strategy that works really well for getting people into that first property, that first investment. If you're looking for a customized solution that would work for you, reach out to myself and the Kyle Ford Mortgage team.
Hey, it's Rob. Welcome back to Everyday Investor. Today we're talking about how we can make money partnering with experienced investors. I've got Lee and Sarah on the show, guys. Thanks for being here on the show. And Sarah, thanks for doing double duty.
Thanks very much for having us.
Yes, you're.
Thanks,
people don't know, or maybe they do now, but you're one of the producers on the show and helping do some episodes with me. And then, of course, we met Lee. And Lee's one of the partners on the show. Thanks for believing in the show. Appreciate that. But when it comes to investing, lots of properties, and now kind of getting into the bigger stuff, commercial properties, converting them into residential. You guys are doing this together. Talk to me a little bit about how that came to fruition. Sarah, I'll start with you. In terms of, partnering with Lee, Lee partnering with Sarah, and now continuing to scale your business and offering an opportunity to everyday investors to be able to also partner with you guys just by simply writing a check.
Okay, so true story. I don't think we've actually ever shared this publicly. So basically, we actually were here at our other studio, and you're like, hey, let's do some deals together. And I'm like, no, I want to hang out and take the summer off and just relax. I don't want to do a bunch of deals. And then we got to know each other a little bit better. And then Ken, we've each known him for 5 years. And then that's actually how we started, is actually you suggesting it backstage when we were having conversations about this show. And then prior to that, we met when I was teaching a course, and you were just talking about your projects and stuff like that. But originally, you didn't even want to come out.
No, I met her at a project we were doing probably back in February. Big project. So I was talking that's where I first met Sarah and her group of students. And then I think you introduced me to Cam, was one of your students.
Yep.
And then him and I did a JV. Mm-hmm. You didn't want to be a part of that one.
That's true.
And then I got asked to do the show.
Yeah.
And then I was bugging her, we should do some stuff together. And she was like, no. And then I don't know what happened. It just
Just happened.
It just happened.
You know what? One deal seemed pretty good, and we just, I don't know. I don't even know how it. Like, I think it's just more conversations over
Sure.
that and just planting the seed. And
And whenever you're forming a team when it comes to, definitely investing, there's no sense, like, for example, I've been married to Sinead for, I don't know how long. We've been together 36 years, right? And it works for us because we don't put both hands on the same vacuum cleaner, right? Maybe that's my job, maybe that's hers, but we have our separate jobs that we do, and both bring our gift set, and that's what complements a great marriage, if you will. You guys have different skill sets. I mean, I think, Lee, you've had Wise Construction for a long time. You know property, you have a vision for property. You can see something and say, hey, what's the highest and best use for this property? And you know what it is. And so you pick up the hammer and the nails, and now you tell people to hammer and nail it. But as the general contractor, that's what you bring to the BRRRR strategy, if you will, Sarah. We tried to talk you out of doing the amount of things you do because you're always a go-getter, finding deals, leveraging this, leveraging that. And so then therefore it would make sense that why not do some deals together?
yeah, and so I think for me, the biggest part is they were bringing something to the table that I was not as good as I could be, right? And so that's the whole construction piece, but it's not any contractor, it's a contractor that has 20 plus staff in-house.
Yeah.
So now we're not.
And a lot of investment properties.
And a lot of investment properties, but the fact that like the whole, essentially 90% of it can be done in-house and it was controlled, I felt better versus just working with any contractor that has to sub out everything.
Yes.
Right? And so the control piece was important.
And for you, what was the gift set you saw here, other than nice long hair? What did you see that said, okay, Sarah would be a great complement to your business?
So I've always kind of flown below the radar, and I don't have, for everybody listening, I don't have social media. My company, Wise Construction, has social media. I don't even have it on my phone. So I've always kind of kept a really low key. I haven't advertised what I've done or who I've done it with, and I've just stayed out of the social media, I will call it, right?
Yeah.
Sarah's kind of pushed me out of my comfort zone, and she's good with the social media, and she has the following, and she has the people that believe in her and want to do stuff with her. And I think I'm pretty good with the construction stuff, and that's what I like doing. I love doing the construction stuff. I was never really good with talking to people about JVing or partnering up and stuff like that. Most of what I've done has been with family and friends, and a couple of kind of friends of family type of thing, and friends of friends, but not just bringing people in and interviewing them,
Sure.
seeing if we're aligned to go
Yeah.
forward. So that's what Sarah brought to the table.
But I will say though, I was actually not doing a lot of JVs. I think I only had one before we even started doing these. And I didn't want to bring in, because it is a lot of work if you don't have the right setup. And I needed to have that piece in order to be confident that we can turn these projects around on time, on budget. We have the in-house control. So I think it feels like a good synergy. It is a good synergy. We've been doing, I think we have 10 deals on the go right now in the last 6 months that we purchased together. Some smaller ones, some buildings, a hotel under contract right now. But I've been asked many times, hey, let's partner together. I just, when I left my 9-to-5 job, I didn't really necessarily have a plan. I kind of just wanted to chill out and see what happens, what the next things were. Bought some land for some townhouses, bought the resort, and this kind of, sometimes, when you have a little bit more time, you decide that you might want to go in a different direction.
Yeah.
And that's, what happened.
Yeah, and what happens is, of course, I mean, for those of you that are watching, of course, if I have enough money to do my own deals, I'm going to do my own deals. I mean, why? There's no sense to bring more people in, but everybody and every company eventually, if they want to scale, you run out of money. And so why not? I mean, so here we have a business partnership that is acquiring properties, whatever they may be, to a hotel, to a triplex, right? So you guys are doing that anyways. But now you're saying, okay, we've done a lot. We can still do a lot on our own, but why not now open it up to the everyday investor that could help fund some of these things, and then you can split the profits however way we split them, and we'll get into the numbers, But yeah, everybody uses other people's money at some point because you run out of your own.
Well, we're very straight up with, I guess, the people that we're talking to that want to partner up with us. And we asked them if you guys can hold the financing and you have the funds to do this, what do you need us for? And most people's answer are they just don't want to deal with anything.
They don't have time. They don't want to. They're busy doing other things, and they want this to be more passive.
Yep.
Yeah, and when I used to define a joint ventureship, which is just a partnership, I used to define. Did I say ventureship? Joint venture. I used to define a joint venture, the partnership between the money partner and the working partner. I changed my terminology now. It's the money partner, which could be somebody who's watching the show right now, could be Rav. It's the money partner and the expert partner, right? It's more, I'm gonna write a check to you guys, I want a piece of this hotel or this commercial to residential conversion or just this little triplex. I want a piece of that, I'll put the funds out. And the reason why I'm doing it is not because I don't have time. I don't have the knowledge. I don't have the expertise. I don't have so that's why there's so many people that are joint venturing with others, such as yourselves.
A lot of people just, they want to put their money in. They want to feel secure that they're going to get something back out of it.
Yeah.
We try to be, especially in this market, we try to be like ultra conservative. Again, there's hard to predict where things are going when the market's not going up. But we were ultra conservative when the market was going up. We're super ultra conservative now, and I think our partners like that, right? That we're telling them real world stuff based upon today and potentially tomorrow versus what might not be.
Yeah, there's risks to everything. Real estate being a risk too, right? I mean, we never know when the market's going to go up, when the market's going to go down, how many rate increases. In addition to where we're at, what's going to happen in the future, we don't know. It is a long-term, these are all long-term projects, so we're not doing any flipping.
Well, we have to talk about, obviously, always risk and downside, but I know, my first property at 16 with my mom in Kingston, Ontario, her money, I said, Mom, I'll manage it, because I was co-oping at a real estate brokerage. So, 30-some years later, 35, 36 years later, I'm 51, I've not ever lost a dollar in real estate, because Lee, the property going up or down, that's just the dessert of the deal, right? The main part of the deal is somebody else is paying down our mortgage. Perhaps there's a little bit of cash flow, but even that, it's just, I tell people, if I buy a property for $500,000, I put my 20% down, so I put down $100,000. If in 20 years I sell that property for $500,000, I'm so happy. Because somebody else paid down $400,000, right? Over 20 years, I put my 100 down, I got a mortgage of $400,000. In 20 years, somebody else paid it all down. Now, if we can get the inflation, great, but that part of it's speculative anyways, right? Unless we're intentionally wanting to flip or wanting to,
But I've always thought, and we've always agreed that real estate it's long term. It's not cash tomorrow. It's not probably even cash next year.
Yeah.
The little bit of cash flow is going to come from pivoting and doing different things in the market. The good thing that we control is because we are, we're finding the deals, we're constructing the deals, we're doing like everything from A to Z, is that, when the market is coming down, we can offset some of those costs through construction, through management, through a bunch of other things. I mean, not fully, but we can adjust and tweak things where, we can make it less, not as much of a hit at the ends if, our clients, our partners are doing, and we're doing the BRRRR at the end, which is the buy, reno, refinance strategy.
Yeah, and it's still a strategy that works in this market. We just have to be a little bit more cautious with it. And then some of the rents, we might, take a unit or two, put it, furnish it, put that on the midterm or short-term rental market just to boost the cash flow, for now. But there's definitely, that's the beauty of real estate is you can pivot. There's different exits, right?
Yeah.
And so we're not buying, these $1 million properties that have only one unit that's going to rent for $2,000 and we're going to lose money every single month. We're at least, working on something that can be converted into more than, usually 3-4 units or some bigger stuff where there is going to be some cash flow. Exactly how much we don't really know until the rates, until we're refinancing.
But you have your conservative return on investment, and we're going to go to a break here. But I'm vetting you. The viewers are now watching, vetting you. But you're just as much vetting the money partner. I mean, you sent out, I think last week, you sent out one email for a deal and got over 100. Hey, I want in. Right, over 100 people saying, hey, I want in. So let's take a break. I want to go through the numbers. What's the return on investment? When do we get it? What's minimum for you guys, generally speaking? I know it just depends on the deal. And what's the worst case scenario? But I also want to know, what are you looking for in someone like Rav who wants to partner with you, be a money partner in your deals? We're talking to Lee and Sarah. We're talking about how I can make money partnering with experienced investors. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larbi here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to Lee. I'm talking to Sarah. We're talking about how you and I, can make money partnering with experienced investors. Guys, thanks again for being on the show. So we're talking about how you guys are the expert partners. You have gazillions of deals that you've done, but at some point, we run out of money. And I should add, this is a business partnership. You have your own spouses at home, but you guys connected, and people can invest with you depending on who that person is. So as I mentioned, Sarah, just a week or so ago or whatever it was, you sent out a deal, say, hey guys, who wants in on this? And within minutes, there's like 100 emails saying we want in. What are you looking for in a money partner? If Rav came to the table and said, guys, I see you just purchased that 10-plex, or you're going to turn it into a 10-plex right beside McMaster in Hamilton. Rav wants in. What are you looking for?
Yeah. Do you want to take this one? And I'll add to it.
Okay, sure.
I mean, I'm sure you're going to say someone who doesn't give you a headache. Well, someone who doesn't want to micromanage you.
Well, somebody with the same goals, right? Because for us, these are long-term opportunities. We don't want to sell them. This is not a flip. We do want to keep them for a minimum of 5 years. For the small stuff, and a minimum of 10. For the larger stuff, likely, they need to be accredited. But ultimately, this is, it's a relationship. It's a working relationship for many, many years, and we have to make sure that just like we're vetting them, they're vetting us as well. In terms of what we're looking for. There's usually a minimum of about 300,000. If we're looking at the renos, the down payment, closing costs on a small thing as a minimum that we would want, and then somebody that can qualify on the entry, but as well as the refinance as
Okay,
well.
so let me ask you these questions then, because you've just said a lot. They have to be thinking the same way in terms of your investing strategy. So when you look at something, what is the return on investment? So meaning once we've done whatever we've done, take some time to, take the ugliest, gig on the street and turn it into something beautiful and tenant it out. But once that's kind of done, which may take, depending on what we're doing, could take a year or two, or it could take 2-3 months, or it depends on what it is. What's the general return on investment that you're looking for, Lee, in something like this?
So return on investment when we buy an asset.
Annualized, yeah.
When we're buying a property and we're, exiting on the refi once it's completed, sometimes that return on investment is infinite.
Infinite. And you're saying that because, just so the viewers understand, you're saying because when you put your down payment of 20% or whatever it is, and you're putting in your construction cost, which a lot of it's in-house, so we get to save a lot there. Obviously, we're still charging, everybody has to eat, but you have your construction costs, you've brought up the value, now you're going to the bank and you're pulling money out. You're saying sometimes you can pull out all the money?
In a lot of cases, we're pulling out all the money. In some cases, we're pulling out more. And in some cases, more so now with the market, we are leaving a little bit in. But the deals that we're doing now, the amount that we're leaving in, I don't look at it that we're leaving in 50 grand or 100 grand. I look at it that you bought $1 million property with 5%
Yes.
or 4%, which you can't go to the bank and do.
Yeah.
So
we may be leaving in 40, 50K,
Right.
but the property's worth $1 million.
Correct.
So now you're saying, well, Rav, if you look at a very conservative increase in a year, you look at these guys paying down our mortgage, our tenants, our clients, you look at the cash flow, when you add those three up and you divide it by the 40, 50, now you're saying that it's stupid to talk about because it's pretty much infinite.
It's
right?
pretty much infinite.
Okay.
I mean, we're well past the 50% on.
So let's say we came across something that we didn't refi and it just needed lipstick and you have an eye for it, like, wow,
projects.
this thing looks like it's a big deal, but it's really not. Conventionally, Sarah, you wouldn't want to get out of bed to look at something if it wasn't on an annualized basis. What percentage?
Yeah, I mean, I don't think we like the small things anyways, so we are doing full guts. And I probably won't do a deal if I have any more of 10% of my original money still left in. So what we're trying to do is lift the property enough that we have at least 10% or less than our original funds still left in the deal. Again, we don't exactly know where the market's headed in the future, but in the long run, we could always do a second refi. But we're looking to pull out, the majority of our
Yeah, but when you put it like that, then the
Yeah.
return's going to be 70, 80,
it's
90,
very
100%.
good, absolutely.
But as
Yeah.
somebody who tells friends and family, hey, I'm investing with Sarah and Lee, and they tell me my return on investment's 121% per
that
year,
sounds
then
crazy.
they're going to think, my friends and family are going to
crazy.
think you've been had. So,
Yeah.
and I believe that because I've done that. We know, as experienced investors, we know we can do that.
Yeah.
But generally speaking, if it's not 20, 30, 40, 50%.
I mean, I've never seen a real estate deal in all the time I've been doing this. I've been doing this for a long time where anything's come in less than 50%, 100%.
Okay.
in the burst strategy.
In the burst
specifically.
strategy.
Well, this is what you do. I mean, you might as well.
Right.
You have the ability. Rav has to buy turnkey. Or turnkey meaning I just turn the key and it's all done because I don't even know how to hold a hammer. But if I'm going to partner with you guys and you, the experts, do all that, then I could be the money partner. So you're saying, in all of your experience, because you know what you're doing and you can hold a hammer or tell people how to hold a hammer, your team.
Prefer to tell people how
Yes,
to hold the hammer.
yes. 50, 60%. So,
Yeah, at least.
okay, so now Rav's partnering with you. Everyday Investor is partnering with you. What is that split? Is it generally, there's no right way to, but generally it's a 50-50. Is that what you also offer? If Rav goes on title, if Rav provides the funds, you guys do all take care of everything else. Do we split the ROI 50-50?
So everything is split once the property is completed, once the property is refied, once the money comes back, it equalizes to 50-50. That's for the smaller
yeah.
stuff. For the larger stuff, it's deal dependent depending on the size of the deal. And some of the larger deals will require 2 or 3 money partners to come in depending on the size, depending what potentially might
Sure.
be left in.
Yeah.
Where we'd have to decide if it's worth it for us to do the deal, to manage the asset,
Yeah.
do all the work.
If the deal's big enough and you need 3 money partners plus there's you, and we all split
Right.
at 25% each, is that enough? But you'll know that beforehand.
Well, if it's a $10 million deal, and,
Yeah.
and we're going to take 10%, and we're going to give away 80%, it's a pretty good deal, I think,
Yes,
right?
yes.
If it starts to come down where it's like a $1 million deal and we got to bring in 3 or 4 money partners at 10%, not such a good deal.
Of course, okay. So our ROI, like you said, you've never seen anything less than 50% annualized. If I was your money partner, then that means Rav gets to enjoy 25% on an annualized basis. You guys enjoy 25% on an annualized basis, even though that's the lowest you've ever seen.
But the other thing too is you're also getting all that, you're getting that debt pay down from your tenants.
Yeah.
In a good market, you're also getting the appreciation of the
Okay, so what you just told me is just on the lift?
That's
So
just
the
on-
ROI is on the lift, and then after that, year 2, year 3, year 4, I mean, we could be at 20%, we could be at 30%. It depends on how much you still have left.
This is getting better.
getting
So
cash
you're saying
flow.
to me, we go 50-50 on the lift, on the part that you increase the value from all the work that was being done
From start
after
to
stock.
finish.
From
So
start
they
to
come in at
finish.
the beginning and they take advantage of the good and the bad, right?
Yes.
I mean, we're in it for 5 years, so it's the equity, it's the lift on after the construction on the first refi. We can always do a second refi if we wanted to. It's the mortgage pay down over the time that we hold it. It's the cash flow over the time that we hold it.
Yeah.
So it's everything from start to finish. Year 1, once we do the refi, that's going to be a different ROI than year 2, year 3, year 4.
Yes. Yes, and for those of you that are wondering why these last several months of episodes, I haven't been writing on the board. I have frozen shoulder. Pray for me. No, that's very exciting. So now we're talking about, yes, there's appreciation, there's debt reduction, someone paying down our mortgage, there's a little cash flow. When we add that up with the little money that we're in, now we're looking at, again, 30, 40, 50, 60, 70% annualized. We get to split that. Okay, so how much is needed? You saying generally a minimum of 300,000 because you're, it's a scale of economies. You're doing bigger projects, and
I mean, these are full gut renos usually. So depending on how many units, I mean, we've done some projects where it was a little bit more cosmetic, and that was 150, 160-ish, and then could go to 350, and then there's the down payment. We do have access to private lenders and stuff like that, so we can work with the right joint venture partner. Ultimately, we do want them for the smaller deals to qualify on the entry and then also on the refinance.
But if
we
somebody
can also, being in control of the construction, for our partners, we can help fund some of the deals. Not all the deals and not 100% of the deal.
Yeah.
But if the construction's, 200, 250.
So you'll put some skin in the game as well if you need to.
We can fund it and then hold that until our partners get the refi, and then we pay ourselves back, or the construction.
So we can be creative. Again, it's more about the relationship than it is about the deal on paper, right?
Correct. And the key to me is the relationship. Of
course.
We want to feel comfortable, and much like people are putting their trust into us, we have to put our trust into our partners because they're the ones holding the mortgage.
Yeah.
All we have is a piece of paper that's signed that we hopefully don't have an issue with.
Sure.
Right? But really, the trust is on that side.
Yeah, of course. Well, I think it's on both.
It's on both.
I need to trust you guys, but you need to trust me that, hey, I can still sleep at night if something. I mean, you have to navigate this, right? There's going to be turbulence.
Mm-hmm.
I don't go on an airplane and think there's not going to be turbulence, but I do trust the pilot that he's going to get me through it.
Yep.
In the same way, there's going to be turbulence, and if I have a problem with that, I'm probably not the right partner.
Everything can be figured out through communication and having a chat. It's construction and it's investment. It's a market. Markets go up and down. And we've had some conversations with our partners because of the market right now. And you know what? Everybody's on board still. Nobody's panicking. Nobody's freaking out. We're pivoting. We're doing some different things, midterm rentals to increase on the cash flow.
And you know why you guys are doing that? Because I'm money and you're experts, right? You're the experts. That's why I wouldn't know how to pivot. Okay, guys, time flies when we're having fun and we're learning. That's all we have for this episode. For those of you who are watching, if you take away the commercials, these shows are like 23, 24 minutes. That's why we're doing webinars. If you go to everydayinvestor.com, Lee is actually going to be doing a webinar with Sarah and I, or I'll be doing a webinar with these guys if we're talking about the same topic. So go to everydayinvestor.com, make sure you sign up. We'll see you next week. Same place, same time. Honey, love you. I'll be home soon.